Hello, everyone. Welcome to Test, Optimize, and Scale. I have Marcus Laun, EVP and co-founder of Quarry, with us here today. In the world of investment crowdfunding, Marcus is the founder of one of the top issuers to date, have raised, tens of millions of dollars from retail and accredited investors using these exemptions, using these vehicles. Also going to get into his deep venture capital history and everything that led into the creation of Quarry. Marcus, thanks for taking the time to join the podcast here today.
Thanks for having me.
And Marcus, you and I have been friends for a while, back to the Growth Circle days, and have seen different projects you've been an investor in, seen how you've been able to scout out groups that are primed for growth, and thought we could, introduce you to the audience with your background, your history. Where did it all begin?
It all actually began on Wall Street. So I started out as an analyst coming out of business school, and really ended up looking at young companies and small companies, migrated from looking at distressed investing to actually helping companies raise money. And the real breakthrough as far as, capital formation and really helping early stage companies was, when I started an investment banking group at Knight Securities. We were the biggest market maker in the microcap space. And I helped, start a fee generating investment bank within that structure, and really, got to understand, what makes these penny stocks tick over time, and what the successes were versus the failures. And ultimately, I learned those lessons and worked my way through the markets and migrated, from the public markets all the way through to real startups. So I ended up with a breadth of experience, and I hate to say it, but most of the lessons I've learned by seeing other people make those mistakes, and as long as you avoid the mistakes, the path kind of lays out for you.
100%. And not everyone is comfortable talking about mistakes, even that they've seen from others, and only want to talk about success. The fact they're able to say, hey, I saw these things happen in the market. I was able to shape what I was doing accordingly. What made you want to focus on startups? I understand, capital formation and likely, a missing space in the industry. But why startups versus larger public or private companies?
I guess I've always, kind of, looked at businesses and always wondered about how I would do it better, or what opportunities aren't being met in the marketplace. My undergraduate education was actually in hotel management, and I worked in food and beverage and restaurants, and I developed a habit of every time I walked into a hotel or walked into a restaurant, I would analyze what they were doing good and what they were doing bad. And I just started applying that to the business world. So it's really just, kind of that analytical, creative mind of thinking about what opportunities in the market or what customer needs aren't being met. And then thinking about, what I should do to meet those needs.
Because you have travel, hospitality, all based around the experience, and little feelings, emotions that the customer goes through can make all the difference. I actually worked at the Four Seasons back at school in Santa Barbara in food and beverage. And I've had some of those same thought processes walking into restaurants, and the entrepreneur mindset, always looking to better things, improve a model, take something stronger out to market.
Yeah, absolutely.
And why move away from the world of Wall Street? Success there, understanding the ecosystem. What occurred to make you want to create startups versus just be on the venture capital side?
The idea of investment banking, once you're within that structure of an investment bank, the motivation is always to go to work for bigger and bigger companies, because they generate bigger and bigger fees, so that you can make a bigger and bigger paycheck. And I found that the bigger the companies that I dealt with, my services of raising capital ended up being more of a commodity product, because There are dozens, if not hundreds, of middle market investment banks and investment bankers trying to provide that middle market service. But helping an entrepreneur craft his story so that he can actually build a product that is disruptive is a lot more fun than just trying to find $100 million for a construction company or an oil and gas company.
Sure. Why be a commodity? You could be directly part of their growth.
Well, yeah. And it's also, when you're finding early stage opportunities or early stage companies or working with, with real new technology or entrepreneurs, it's rewarding when, they listen to your advice. It's rewarding when you can actually, make a difference in their journey, right? When you're dealing with a middle market company that's served by any number of investment banks and you're just haggling about fees and providing them capital that is widely available, it's now it's just a cookie cutter business. And granted, it's lucrative, but I was always attracted to kind of these early stage companies that were pushing something really unique, and they make lousy investment banking clients. So I ended up really moving towards being a consultant or taking an equity stake and then helping take the company forward from that position.
I have a shared mindset with that. It's what I experienced in the world of ad tech, being one of 100 other vendors, and again being on the front lines with startup to mid-market businesses we service. I have to point out, so working as a consultant, supporting these groups into their growth, very admirable in the sense of the success rates of startups are not great. The more resources they have, the more great minds that are working on their model, the better. How do you pinpoint which projects you're going to put time into? I imagine a lot comes across your desk, and you've been very successful at picking winners. I know firsthand when you bring up to me, what you say comes to life. And that's my experience, and it's been consistent. It's very difficult to do. What do you look to identify when speaking to a founder or a startup?
Obviously, you have to think about whether or not the founder. It always comes down to the founder. Are they going to be able to stay the course and get to the finish line? Is the product truly disruptive? Is there a there or is it a Me Too product? So you want something that is truly unique. And then, the big question is, how fundable is it? What is the likelihood of actually being able to raise enough capital and execute before, to get to that end goal? And, a lot of business models, don't lend themselves to that. And it's not necessarily scalability. It's more, how dilutive, is that path to raise the capital? Like, for example, I tend in the venture capital or micro cap space, I've always avoided kind of the biotech side of it because I've always felt that the amount of capital required to get, a drug into production and approval is just not well suited to, raising, $5 and $10 million at a clip, from small investors, just because to get something through that process, it takes, tens, if not hundreds of millions of dollars, readily available. And that business model, just doesn't pencil for me. So I'm looking for, ways that you can build a significant business without a huge amount of CapEx so that, the founder isn't diluted down to zero by the time, the business has decent size.
Less barriers to entry, less of a demand for ongoing rounds, substantial ones at that. And as you're, highlighting here, the dilution, cap backs that will then occur for the organization, it can be counterproductive towards their growth.
Yeah. And obviously having a management team that understands that those parameters and is willing to do the hard work, is always important.
For biotech, you were talking about the high cost that it's going to take, for test trials, getting something to market. Beyond biotech and that industry, are there other red flags or areas of concern that has led you to pass on deals in the past?
Uh, well, one lesson I kind of learned the hard way is you should always, before you really spend a lot of time working with the management team, you should do background checks on the guys that are across the table from you. Yeah, I've had too many experiences where people told me they went to Harvard, and a couple of months down the road you find out that they didn't, and that's kind of a red flag, is when people are making shit up.
Hard to believe what people are saying after that, and that makes communications dicey at best. I've run into it with bad actor checks using FINRA-regulated portals like Start Engine, and we're about to launch a marketing campaign, and there's delays, and we find out something wasn't true. That was definitely a bad sign.
But yeah, I try and shy away from capital intensive businesses, and one thing that's important to me is actually looking for asymmetric returns. So if you ask an investor to put $10,000 in, he might lose his entire investment, but he should be able to make 10 to 20 times his money. And so I don't like businesses or ideas that really depend on kind of organic growth. I want something that's kind of can get pretty big. And obviously you hear that from venture capital guys all the time. I would say my growth parameters are kind of less aggressive than that, because individual investors and retail investors aren't necessarily fiduciaries. They're managing their own money, so they can decide what their own return needs are.
Sure. And removing some of the risk, seeking out deals that are less capital intensive and don't require that organic growth. They can really be scaled quickly and make the juice worth the squeeze. Really make that risk more worthwhile has been the focus.
Yeah.
How did you get involved in the world of asphalt shingles? How did Sky Quarry become a project of interest? How are you guys able to build this growing company, and what stood out to you about this vertical?
Yeah, so we kicked off Sky Quarry and ended up with that concept. Really, I've banked and worked with environmental oriented companies my entire investment banking career, and I've always found it really interesting as far as reuse of materials that we've already harvested, and being more efficient, because I think we have to do that as a society in general. And we stumbled onto the Sky Quarry, the asphalt shingle opportunity, and it really resonated from multiple sides, because it's so easily recyclable, as well as it's such a massive problem. It's 15 million tons going into landfills every year, and a barrel and a half of oil in each ton of shingles, which equates to throwing away 20 million barrels of oil into landfills every year. It's pretty wasteful. And the fact that the business model allows us to get paid to take the material and then harvest the material and resell it is kind of that elegant solution that I've always looked for in a business model.
And I know one of the key points of your messaging is waste to resources, and that there's 7 different revenue streams from the shingles from there.
Yeah, that's obviously really lucky from our perspective, because we end up taking the shingle and having 0 waste products whatsoever. The surprise is that even the fiberglass that we're pulling out of the shingles is very valuable and has a bunch of different applications. So we're it's just it's a lucky coincidence, and I think we're also very lucky that we had the resources and stumbled into a bunch of good deals that allowed us to position the company in this way right now, because all the stars are aligning as far as environmental concerns, as far as municipalities wanting to ban this material from landfills, combined with an attractive oil price for resources. And one thing that we haven't really talked a lot about is the limestone powder that comes out of these shingles can also be used for carbon sequestration, pulling carbon out of the atmosphere. And So there's all kinds of benefits that come off of this waste stream as far as recycling it. We're lucky that we've positioned ourselves to capture that and kind of be the first mover.
I love it. Impactful, very intelligent business model, various revenue streams. You talked about what you look for in investments, and now you're speaking to why you've built the company accordingly and are choosing to spend time, for this specific business model, not just to make a difference, which is obviously at the top of the totem pole for you, as you mentioned, but because it's so viable.
Yeah. No, and we do, and the amount of resources that we plow through as Americans is staggering compared to the rest of the world, and to cap it to some extent and actually create new streams of value and new products out of it, I think is important. I think very few people understand that the amount of construction demolition waste that's generated in the United States is equivalent to twice what we generate just as municipal solid waste, just our regular garbage. There's 2x that amount in construction demolition waste across the United States. So anything that we can do to reduce that is going to pay dividends.
I see those graphs on social media of our waste here as Americans compared to the average for each individual across other countries. And you're basically taking that waste and finding new applications, creating zero waste along the way. And I have no gauge for construction demolition waste. It's not something I have my hands in on a day-to-day basis. I could see it in my neighborhood, see the asphalt shingles as well. But being able to have that whole narrative brought to life and seeing it put to use and with actual numbers behind it, it's substantial.
No, and the beauty is we're going to create a lot of jobs. We're going to create a lot of microeconomies out of it, and we're going to facilitate the shingle industry actually becoming a lot greener because we'll be able to give them post-consumer recycled materials to make new shingles with. So we can create a circularity in that entire industry, as opposed to having it just be one way from mining the oil to mining the stone and then dumping into landfill after 20 years. And it's pretty crucial right now if you think about it. And unfortunately, it's also timely because these hurricanes that we're seeing in Florida generate thousands and thousands of tons of waste shingles as they rip these shingles off the roofs of houses, with these storms. So, with climate change, there's actually more and more of a need to recycle this material.
Yeah. And you don't think about that watching the news. You're looking at the floods, you're looking at people, you're able to attack this one issue and, benefit a lot of people. You mentioned the jobs, talked about shareholders, all the different businesses and individuals that will benefit from the new products that are developed. So you're able to find your area where you can, really be of service.
Yeah.
And why has the industry been late to the game for greening the processes, if you will? Why aren't there more companies doing what Sky Quarry is doing?
I think that there have been companies that have attempted or worked on recycling the asphalt shingles. I think their problem was they built their business models around buying the waste shingle material from a recycler, and the leap that we're making is we're actually vertically integrating and demanding that we get paid to take that material. And I think that's where other entrepreneurs have kind of fallen short because they either were dealing with $100 oil and expected it to stay there, whereas our business model allows us to work down to $30 oil and still be competitive. And so we stress tested the model and wanted to make sure that we got to that low cost level. The other way we stress tested the model is to make sure that we had multiple revenue streams. And the other way we stress tested the business model is to make sure that we could make money not selling a premium or differentiated recycled product, but to be able to make products that we could sell into commodity supply chains so that we didn't have to depend on selling a green product or having a green premium in our product. And I think that's where others have kind of stumbled in this endeavor.
Sure. Having to pay that premium and then becomes a choice of, do we want to be green, or if it's, a commodity, great, you're just fitting into their buying process.
Exactly.
And making sure you're getting paid to take the materials so that everything is sustainable from a business standpoint.
Correct.
So you've been very successful in your capital raises. Why did you choose to do Regulation A+ and target investors online, making it available to essentially everybody, versus going down the VC route? You obviously have contacts, Wall Street. What stood out to you about what's referred to as investment crowdfunding?
Listen, I like in the early stage public companies that I've seen, and the micro cap companies that, the real successful, kind of small mid cap companies do have that kind of retail buzz, and they have their fan base of retail investors. And then, when I picked clients and looked at clients that I was working at as an investment banker, I always kind of did that research. I'd get dozens of companies coming into me saying, can you help us, with liquidity? Can you help us, build a shareholder base? Can you help us raise money? And, I learned to look at, how many shareholders do they have as far as an audience for when they're putting out news and communicating their story. And inevitably the stocks that were weak and the stocks that didn't trade was because the management team hadn't put a lot of focus on developing a retail following and communicating to those shareholders that the beauty is, once you get to a certain level of shareholders, the stock trades all by itself. You don't need to, you should always do investor relations, but you don't need to artificially stimulate the trading of your stock. You can actually just let the market take control of itself. And the more shareholders you have, the more stable buying that you have, the more stable trading that you have. And so, a litmus test for me as far as what's a good public company is if you do a crowdfunding and it's successful, then you know that you'll have an audience for that story once you actually get to a public market. So I've always liked the crowdfunding as a starting point since it was invented. I've spent a lot of time working with institutions, around the world, and to have that investor base loaded into a company just makes raising capital after that much easier. So and then, we know what it's like in dealing with institutions. If they feel that they have the upper hand, they'll lever it and take advantage of a company, and they'll push transactions that are less friendly to management teams. So I think crowdfunding is an amazing opportunity and an amazing resource. And I actually think it's the future. I think every company that wants to ultimately go public in the future through a natural IPO is going to have to start with crowdfunding to prove that there's a reason for them to be public. Because if you can just, the market has come full circle. The venture capitalists used to look, for the public markets as their exit, but there's so much money sloshing around in private equity that you have all these, companies that become mature, far, long before they actually go public. And I always think, the retail investor deserves a decent bite of the apple as far as the upside of a company. And I think the VCs and the private equity guys and Silicon Valley have basically taken that opportunity away, and they only end up selling, kind of their rotting fruit to the public, instead of, letting them get in on an IPO at $100 or $200 million. So I love the idea of the crowd being involved in a company and feeling like they're an owner and feeling like they're contributing to the growth of new businesses, and the Ubers of the world and the Airbnbs and the Googles, have kind of taken that away because they don't go public until they have $100 billion market cap.
Very true. And I've heard, democratization, early stage access to deals, early stage access to capital for founders who would not have those existing relationships. I really like how you point out the company should, mature to a point before going public, and you could build a crowd, you could build that retail buzz before you take it to an IPO. I haven't heard it broken down as the stock can then trade itself afterwards, and I'm going to be quoting you on that. I work with microcap companies as well. I've spoken at microcap conferences, and it's a common issue of, hey, this stock's not moving. How do we build this retail base up now? And at that point, retail seems less attractive. It's a drop in the bucket, to get even a sizable amount of investors at the retail level start participating. So the fact that you're able to raise 22 million in the first Reg A, just completed a very successful Reg A in 30 days, here in the fall, it speaks loudly. But by the way you're breaking it down, it's clear it's part of the larger plan, because this all needs to be sustainable for all sides of the table. And if you have that type of interest, if there's that amount of social sharing, as we say in marketing, occurring, it's going to be a lot smoother ride, and less likely to fall into a circumstance to where you're having to bring more people to the table, as much as, hey, those who've invested are now sharing it. There's thousands and thousands of people who've already purchased into Sky Quarry stock, so you've set yourself up for much larger long-term projections.
Yeah. And I think crowdfunding is especially attractive for companies that ultimately have a consumer-facing component. So anything that is a brand or is a product that is going to be sold to the crowd, you're basically building your awareness by raising capital, and you're getting alignment with that. So I think that's even a stronger case for crowdfunding.
Especially for Sky Quarry, investors get that similar type of feeling that you do, in terms of what they're doing to take proactive steps in terms of improving how construction materials are wasted, the impact on the environment, greening processes that will have negative effects over time for us all. So they get to share in that fulfillment, and as the organization grows as well, sharing the upside.
Yeah, no, we actually, I talk to a lot of our investors, because I think that's something that crowdfund investors deserve, is access to management and feeling like they're in an early stage. And you'd be amazed at how many of our early investors are actually, worked in the construction industry or contractors or building supply, and we're working on solving a problem that they've seen, existing for a long time. So it's rewarding from that perspective.
I saw it myself. I had the opportunity to moderate your webinar, and there was over 400 attendees, over 100 questions. I was trying to bulk them together fast enough, and a lot of them were professionals in the industry, and all different types of ideas and questions, and even paths towards collaboration. But the type of engagement I saw around your deal was outstanding in comparison to the standard issuer, be it regular regulation crowdfunding or larger scale regulation A+. People are very enrolled in what you're doing.
Yeah, no, and we're really happy about the crowdfunding also, because we now have hundreds of thousands of people that have evaluated our materials and heard the story. So it's not just the 10,000 that have invested; it's the 200,000 that evaluated us and took a look. And I think that bodes well for us as we move into the public markets, because we'll be a known entity.
Mm-hmm. Can you talk more about the public markets and what's next for Sky Quarry?
Sure. We're listing on NASDAQ Thursday of this week. So when this comes out, it'll hopefully have happened. But it's important. I chose to go public on a major exchange just because the more junior exchanges, you do have liquidity issues, and you do have, kind of structural issues as far as, governance and things like that make raising capital out of those exchanges trickier. And, we targeted getting on the NASDAQ just because we knew that you have that stamp of approval, and that stamp, really helps when you're getting additional capital and looking to grow. So that's what's happening. And we're really excited about being on that platform. We're really excited about providing a return to our early investors and giving them a liquidity event. But we're also excited about building our audience, communicating with them, and that activity around being a live public security, because then there's always something to talk about and people are always watching it. So you end up staying top of mind. In preparation for this podcast, I was really thinking about that kind of path from crowdfunding to being public, and it is kind of silly that there's so few public companies in comparison to the economy in general. We have hundreds of thousands of companies being formed every year, and hundreds of thousands of companies, if not millions of companies, being operated across the U.S. And to have such a small number of them being public, I think is a shame, because I think people deserve the variety, and we do need to kind of spur the economy by having more ways that you can participate.
And like you said, you're able to watch directly as an investor. Once it's in the public markets, everything's disclosed. It's built for more safety, more compliance, across the board. These are good things. So the fact that you made a point to say, hey, this is what we're doing, NASDAQ, and working with investment crowdfunding issuers, that's not always the story. It's generally not that clear of a path towards liquidity, where you were able to say, hey, we have over 10,000 investors going public. You can see what you can do with your stock directly here. I know that absolutely resonated with audiences on your offering page and through all the marketing that got them there. It's only so many companies. There's been over 8,000 Reg CF issuers at this point, Regulation A less. But at the same time, I could count the amount of IPOs that have occurred. You're in a small list, already at the top of the Regulation A plus lists. But I think it's going to be one that many founders are studying and looking to take similar strategies into action themselves.
No, it goes back to seeing all those mistakes I've seen other people make over the years and avoiding them.
Yeah,
we've kissed a lot of frogs, and we turned down a lot of bad deals from people in order to kind of make sure that we preserved this path to an IPO for our shareholders. So we're really excited.
Very nice. Well, I point to you guys as the example for founders listening in, for marketers, marketing professionals, VC industry professionals that are tuned in. What types of words of wisdom, recommendations can you provide? Actionable insights, if you will, towards what they can test. I look at marketing growth as a series of tests, and finding out what works and building on that. Whether it's towards capital formation, whether it's towards business formation, running a successful IPO or investment crowdfunding campaign, what would you recommend for the audience to test out for themselves?
Considering our relationship and how we've worked on a number of deals over the years, I think obviously having good professionals advising you. I can't remember that saying, but they say, a professional is expensive, but an amateur is a fortune, or something like that. So to have the right advisors around you to guide you and to be willing to take their advice. On the crowdfunding side specifically, obviously to make sure that you work hard enough in crafting your materials and crafting your story so that it actually resonates. And then obviously, having the budget to kind of let the laws of large numbers work, right? I think in my experience that the crowdfund opportunities or the crowdfund deals where they've kind of just taken a lackadaisical approach and just thrown a couple of dollars at it and thought it should be kind of like a soda machine. You put your money in and more money comes out. You're not going to be successful in crowdfunding if you underestimate the amount of work it's going to take to have a campaign run correctly. And you need some money. You need to make sure that your message is correctly. You need the materials to resonate, and then you don't underestimate the benefit of the urgency call to action towards the end of a campaign to get people to actually pull the trigger. And so you need to kind of plan for all that and have some budget around you.
You need to have conclusive enough data, enough people going through, not give up on it. Like you said, and I love the analogy, don't just look at it as a soda machine. Hey, we spent this much, what did we get back? As much as we're hitting the goal, we're bringing on the right advisors, we've crafted the right story, we have to pivot, we're going to pivot, but we're going to hit that goal. And even if it happens during the urgency, the call to action at the end, keep playing for it so you're able to hit those goals. I see some founders, get started, then get stuck and look to quit on the whole thing, whether it's, their rounds, their marketing campaign. I've seen it for their business as a whole. What would you share to those folks in terms of how to optimize, especially if it's not working right out of the gate?
Again, you want to make sure that you have, kind of enough budget and enough, assets, and it comes down to passing the hat around your friends. If you can run a little bit of a friends and family around and get your friends involved and get them excited about it, then it should work as a crowdfunding. So I've always, I think one thing that you shouldn't do is think that every deal is appropriate for crowdfunding. And every deal is not appropriate for crowdfunding, and every deal is also not appropriate as a small cap public company. I think a boring business is a great large cap public company because people just look at the financials and buy based on a price earnings multiple. But small public companies and crowdfund deals are gambling. The fact is people are cruising through the internet and see your banner and pulling the trigger on a small investment, average size, whatever, between 1 and 3,000, and you shouldn't underestimate them just taking a flyer on you. And these guys are buying lottery tickets; they're not buying dividend stocks. And very few investors are really looking to receive a dividend. And these people are, to some extent, a lot of them are looking for some entertainment, and they like the story. I can't tell you how many investors we've reached out to, and I get a phone call and they don't remember investing. And they're like, "This was 2 years ago. I totally forgot about this. How's it going?" And so people, it has to be story driven, I think is the crux of it. And you have to give people, some blue sky, and give people, some value in return in the form of, what you're going to try and do with their money. And you have to take that responsibility seriously. I'm sure you've seen, dozens of crowdfunded deals that kind of raise some money, go spend it, and then they have to wind down operations because they don't know what they're going to do for their next trick. And I think it's important for the crowdfunding industry to kind of take itself seriously and take the fact that they're taking other people's money seriously, because you have a fiduciary obligation, and you have to keep, it's not going to be easy, and crowdfunding is not easy, and then building a business is not easy. But if you're taking other people's money, you have to take it seriously, and you have to be committed to making them some money. And so you should always be evaluating your business as to whether or not, what the likelihood of that is going to be.
100%. And it's refreshing to hear you say it's not going to be easy, because I find it's really the top 10% of issuers that really move, and bottom 50% pretty stagnant, and feel like you laid out a pretty effective formula right there. Start with friends and family. If the story is resonating with them, you can continue building. If it's not, how are you going to take that to cold audiences? Really make sure everything about the brand, the organization is resonating with audiences, because many of these, both retail and accredited investors, are participating to be along for the ride. And some of them may even forget that they've invested to begin with. It's the smaller, lottery tickets like you mentioned. So, really being able to understand, we have to create this community and be communicating to them in a way that has them engaged, maybe even sharing, and beyond that, have to be respectful to the money that they put in, even though it's a lottery ticket. Unfortunately, I have seen a decent amount of companies, not too many, dozen, maybe a few dozen, raise to decent levels, some of them very successful levels, and unfortunately shut down. And there's a list for those issuers online as well that can be found. And, I know it's tough to go back to the same investors for the same goals. Hey, we need more money for the milestones we told you we were going to hit 2 years ago or last year. So, really being able to commit, put in the effort, and do whatever is needed to get there.
Yeah, absolutely. And, a historical fact that, a lot of your listeners aren't going to know is, there used to be, kind of this cadre or hundreds of thousands of stockbrokers that were kind of retail regional stockbrokers. And they used to provide this as a service. These regional brokerage firms used to take, local companies and raise capital for them. And there was a vibrant industry of these stockbrokers raising money for young companies, in regional markets. And the consolidation of the brokerage houses and the restrictions around FINRA and Wall Street have essentially conspired to force these stockbrokers to become, less deal junkies and more, kind of traditional asset managers. And the problem is you've lost that potential source of capital for, hundreds of thousands of early stage companies. And so, the thought leadership and putting structure and putting rigor around, returning money to investors in the crowdfunding space, which is, effectively a Wild West compared to, Wall Street, is really important, because that's the only way it's going to be successful long term.
It's going to be the investor success stories that really move things, right? I remember in 2017, explaining to people what equity crowdfunding is every day, and more or less am today. But at that time, cryptocurrency, Bitcoin was really picking up, and people were sharing with me about Bitcoin every day, and already getting involved in the space. But it was the liquidity. Some of them were cashing out. Some of them irresponsibly. You saw the Lamborghinis and misspending, but it was real. The liquidity was occurring. Again, you guys are playing towards liquidity. You have that in mind the whole time. But I believe the more investor success stories there are, and we're probably close to many of them, 5-10 years into when that round took place, being able to have some type of exit, a variety of different paths towards the liquidity. But I believe that's really what's going to make this mainstream and a primary vehicle for raising capital. I mean, we live online at this point, and
Yep.
Why aren't we seeking out deals? Why aren't we, investing and into these types of startup to mid-market projects through the internet? Marcus, you've been very successful on these rounds. That's not my personal opinion. It absolutely is, but it's based on the numbers. Top of these issuers. How have you been able to scale? What are some different tips that you have towards listeners towards scale? It doesn't have to be limited to capital raising, but could be towards entrepreneurship or growth as a whole. But I feel like you'll have a unique take on scale compared to the average founder.
Yeah, I think founders oftentimes will align with what, they'll hire an expert and then just think the expert is going to handle everything for them. And I think, my advice is, don't fall into the trap of not, getting your hands dirty. So, when you're doing, developing advertising, writing copy, pitching your story, don't delegate if you don't have to. Like, the best person to pitch your story, effectively should be you. And you should be able to, come up with copy, come up with a sales pitch, and then, let professionals away from you hone it and fine tune it. But, come to the table prepared, and don't think that you can delegate everything away and do a successful raise. Like, the story has to come from the founder, and everybody around you should be honing it and making it better.
I know you roll up the sleeves and like to be on the front lines. I've seen you in everything from, pitch videos to ads to webinars, coming up with advertising copy. We always enjoy our conversations, feel like we learn something from many of them. So I know you're living that recommendation yourself.
I learned that one the hard way. It's like, you just never take no for an answer and just keep plugging away.
There you go. Not always a common value here today. Well, Marcus, as we begin to wrap up, want to first thank you for taking the time to come on the podcast here, share your story, recommendations. Always enjoy speaking with you, so it's a lot of fun for me. If anyone would like to get in contact with you, with Sky Quarry, where is the best place for them to go to learn more? And what are any final thoughts that you want to leave listeners, viewers with today?
I'm reachable at marcus@skyquarry.com, and that's our website, skyquarry.com. I think I've kind of regurgitated, most of my thoughts. I'm really passionate about, crowdfunding as a way to stimulate the economy and to stimulate growth. I think, it's a toolkit that, even with all my years and experience on Wall Street, when I show up in a meeting at an investment bank and I tell them that I crowdfunded, to the level of having 10,000 shareholders, that always impresses everybody, because that is something that an investment bank can't do for you. So don't think that the shiny, the mirrored glass buildings are the only place to get to the goal line. You can do it this way and actually have a better outcome.
I would take those recommendations. I would take Marcus up on his offer and get a hold of him. Marcus, great stuff today. Thank you so much again. Viewers, listeners, appreciate the time, and we will see everybody next time.
Thank you so much.